I'm presenting two papers now that are related, actually. They were both by master's students from a couple of years ago, and they both looked at sustainability related to banks in South Africa. And so this first one is a thematic analysis of the effects of climate change on South African banking sector. And so just as some background, so there's definitely been increased focus in all industries and the effect of climate change on all those different industries. And historically, a lot of the focus has been on sectors that are in more sensitive industries. So things like your mines and other industries. But there's certainly now been acknowledgement that all sectors need to be looking at it, and the banking sector is no exception. So in the banking sector, their impact is going to be through direct emissions from their own operations. But then also they have the ability to be driving a change to a low carbon economy through how they provide capital and funding to various sectors. So the purpose of this study then was to be assessing the impact of climate change on the South African banking sector, as well as their risk mitigation strategies. And so Meladi looked at three different areas. She wanted to see what were the banks actually reporting in terms of climate-related risks, what were they saying their impact is on climate change, and also what were their strategies to address the challenges. And she used stakeholder theory and institutional theory in this study. In terms of the method, she did a qualitative thematic analysis of the TCFD's reports that were prepared by the South African banks. So that's the Task Force on Climate-Related Financial Disclosures, the guidance. She used the 2022 or 2023 TCFD reports. When she was collecting the data in 2023, she just used the most recent reports that were issued by the banks she was looking at. It was just to get a snapshot in time assessment. And she looked at 6 locally controlled South African banks. We have about 60 registered banks in South Africa, but she had to whittle down the sample. There are a number that are foreign controlled or that are mutual banks or that were going into liquidation. And so they're not really thinking about the long term and how would they approach things like sustainability. So after all of that, she ended up with 6 banks, and they are the biggest and most influential banks in South Africa, they're the big names that we have. And also in terms of their reporting, they provide the most comprehensive and consistent reporting when it comes to climate change related issues as well. So they were able to give us a really good understanding of what the banking industry is looking like. And then she used endeavour to do the analysis of those TCFD reports. So if we look at the different areas then, what she was wanting to look at. So the first was how South African banks report on how they're impacted by climate change. So all of them spoke about the fact that they have implemented methods to assess these risks. They're integrating them into their broader risk management frameworks. But the specific risks that they looked at are in 3 areas. The first is financial risks. And so under that, we've got credit risks, and this arises when you have clients that are in high emitting sectors, and as they have transition costs, as they deal with the effects of climate change, they often have those increased costs, which leads to their inability to then repay their loans and their financing, and so then they have a lower credit quality. Then they also have operational risks, so in their own operations, supply chain disruptions, that kind of thing. And then liquidity risks, also as climate change events hinder the bank's ability to meet their own funding needs. And also a lot of them have insurance operations. And so as there are more physical damage events that happen, it affects their clients, and the clients are claiming, and so then they have to pay out as well because of that. Then the next area is what they refer to as physical risks. And these have got 2 types, acute risks and chronic risks. So acute risks are once-off events that happen. So it's things like floods, heat waves, other extreme weather events. We've had devastating floods that we've experienced in South Africa. We've also had heat waves, all those things similar to what's been happening everywhere else in the world as well. We're all experiencing the effects of climate change. And so that often causes significant damage to physical assets. And again, through their insurance clients, it affects not only their own operations, but their insurance clients as well. And then when it comes to chronic risks, that's more referring to long-term shifts in climate patterns. So we have a significant sea line, coastline in South Africa. It's about 3/4 of our country has a coast. And so as we see things like rising sea levels, that definitely has an impact on us, increased temperatures. We've had droughts that have affected the agricultural industry, and then that affects the abilities of farmers to produce sufficient crops, and that puts financial strain and their ability to repay their loans. So the banks are very affected by all of these things through their clients. Then the final area is transition risks. And so as we are transitioning into a space where we are adapting to this climate change, there are going to be things like regulatory changes that we have to deal with, technological advancements that we need to embrace. And then there's also evolving market demand from our clients and investors. So that's something that the banks are needing to deal with. And then also things like legal and reputational risks as well. So there's often litigation related to environmental damage that's been caused, adverse public opinion if the banks are supporting high emitting industries, and what that means for them and their reputation and their operations. The next thing that Meladi looked at was how the South African banking sector impacts on climate change. So the first one was how they are affected by climate change, and then this is how the banking sector affects climate change or impacts climate change. And one of the areas that came through quite strongly was funding the energy sector. So in South Africa, we are very heavily reliant on coal as our main source of energy. We've got a lot of coal-fired power stations, but we've also experienced in the last 15 years what we refer to as load shedding, where we have long periods where our electricity grid is just shut down, and it rotates around. Each area would have 2-4 hours that they're without power. So what then happened is that there was increased reliance, particularly by businesses, on diesel generators for load shedding periods. So the banks would be experiencing this. And then obviously diesel generators, high pollution that it emits as they're doing that. So they are, though, also using energy, and just in their general energy use, the banks are trying to reduce their operational use. They're trying to have backup power, which sometimes is diesel power, but they're also trying to shift to renewable energy, solar power. We are blessed to also have a lot of sunshine in South Africa. So solar energy and wind energy are good renewable sources of energy that we can be having. But as they also then try to encourage their clients to move over to renewable sources of energy and to be reducing the overall emissions that are happening in the country, banks are able to provide financing for their clients to be able to put in solar projects, solar panels, etc., so that they can influence the reduction of emissions. Linked to that then is sustainable finance in general, and providing, sometimes it's called green bonds, to help clients transition to net zero emissions. So they're very involved in issuing green bonds to clients that are wanting to take that on. And then in their own operations as well, as they manage waste, so things like managing their paper consumption, their waste management practices, and also as they then finance businesses that are involved in recycling initiatives. So that's ways that they can also be having a positive impact. Sometimes it's a negative impact, but they do try to have a positive impact as well. And then the final area that Meladi looked at was the measures that South African banks are taking to tackle and respond to climate change. And so there are some things that are repeated from the first two areas, but the one is that they have said that they are committed to reducing their financing for coal mines. And so that is needed to be balanced, though. We have very serious social needs in South Africa, economic needs, and because our electricity production is mainly through coal at the moment, as there's a reduction in financing that's been provided to coal mines, that can have an impact on the availability of electricity, and that has a social and an economic impact. So in all of these things, they're needing to balance. They can't just look at climate. We have to definitely look at the social side as well in South Africa. But through the more positive things they're trying to do, shifting towards the financing, green financing, sustainability-linked investments, trying to encourage their clients in those areas. And in terms of their own operations, they've got a goal of reaching net zero carbon emissions. Generally, they've set either 2025 or 2030 as their goal for reaching net zero. One of the things they've realized is they need to improve their data collection systems so that they can actually be having sufficient data to measure their emissions, scope 1, 2, and 3. And so they can then be having goals and plans to actually, and strategies to actually be achieving that. Then also in terms of their waste and also recycling electronic equipment as well, that's what they're actively trying to manage that to have a positive impact. And then finally, recognizing that they need to improve the governance structures as well to manage climate-related risks. So most of them have, as well as the board of directors being responsible, they have subcommittees that are responsible for climate change as well. And so they're actively trying to manage these risks that they have. So in conclusion, the banks have definitely recognized that climate change has a clear and significant impact on the banks, but they are actively working to mitigate their environmental impact as far as possible. In terms of the institutional theory, these sustainability disclosures are voluntary at this point in South Africa, although they're definitely encouraged, and part of our listing requirements is that our companies need to comply with KING, the KING Code of Corporate Governance, which encourages sustainability as well, but it is still voluntary what they're providing, and so that is being provided to gain legitimacy in terms of institutional theory. In terms of stakeholder theory, they're providing disclosures that are meeting a broad range of stakeholders' interests and needs, so they are trying to meet the different stakeholders' needs. But this study definitely highlights the necessity for banks to enhance their climate-related disclosures. These 6 banks that we looked at, the biggest banks, they were providing good disclosures, but there's still definitely room for improvement. And the need to continue and improve on how they integrate the risk management for climate change into their strategies as well. And then just continue prioritizing that goal of reaching net zero by 2025 or 2030, depending on what they have, which needs improved data accuracy, using the regulatory frameworks and those kind of things. In terms of areas for future research, it was just the 6 biggest banks, so that sample could definitely be included, and also looking at other industries as well. There wasn't any assessment of the quality of the disclosures and if there was any greenwashing, so that would need to be looked at. Obviously, any business is going to be trying to tell a good story. But then also looking at the readiness and the adoption by banks and other companies of the IFRS sustainability reporting standards as well, and seeing how that can enhance what they do. But thank you for your time, and I look forward to any questions that you might have.